So if you're starting out and you're trying to raise capital for the first time, I mean, some of the things that we talked about earlier, like you have to start thinking about changing the perspective of how your friends and family view you, right? They need to view you as a real estate investor.
Welcome to the Bulletproof Cash Flow Podcast. Let's get into the show.
Hey everyone, this is Agostino. To create success in real estate, you need to become great at building relationships with quality investors, raising capital, and developing investment strategies to pull in these investors. These skills are something that anyone can learn, but you must really commit yourself to learning how to do it. Well, our next guest understands this. As a managing director at the multifamily private equity firm Birge Held, he and his team acquire and improve mismanaged, undercapitalized, and undervalued multifamily properties. Now, prior to joining Birge Held, he was a successful real estate investor with a multi-million-dollar portfolio, including multifamily assets, single family, and industrial as well. Now, additionally, he is also the host of Ritter on Real Estate, a podcast where he provides practical tips for investors to blow up their business. Now, with all that, I'd like to welcome Kent to Ritter Show. Hey, Kent, thanks for coming on, bud.
Agostino, thanks for having me, man. I'm happy to be here.
Excellent. Great. Well, now, guys, if you guys like what Kent has to say, you can reach him via his contact page at kentritter.com. Okay, Kent, maybe go ahead and tell the listeners a little bit more about you and how you got your start in the whole real estate game.
Yeah, absolutely. So I started my career as a management consultant. I spent about 12 years traveling around the country helping large organizations solve their biggest problems, essentially. And at the end of that, toward the end of that, my partners and I, a few of us left to the firm we were at to start our own company. And we built that firm up and sold that at the end of 2015. And that really kicked off my real estate journey because, I was taking the capital from that exit and saying, what do I want to do with it now? How do I deploy this in a way that's going to, continue to build wealth without putting all my eggs in one basket, like the stock market. Right. So started educating myself and networking and realized that real estate was the direction I wanted to go and it was going to be the best way to set myself and my family up for success. And so from there, I started really passively investing first, really starting to understand the game, how it works, just educating myself, finding some mentors and doing that whole process. And then once I felt like I had my feet under me and really understood what I was doing, set out and started actively acquiring my own properties. Nice. And from there, really, it's been, kind of a rinse and repeat process as we continue to develop the strategies, continue to become more advanced and mature the platform. And then so I was investing on my own. And then in 2020, I joined up with Birge Held, which is a group that I originally started as a passive investor with back in 2016. And through a few investments, built a relationship there. One of their principals, Tag Birge, has become a close mentor of mine. And he offered for me to come on as a partner in, mid last year and build a line of business under their umbrella. So that's currently where I'm at, what I'm doing and implementing the strategy that you mentioned earlier on Birge Held's platform and using all their amazing resources, being a $1.5 billion asset firm and having full vertical integration from property management to construction and kind of everything else in between. So it's really been taking the business to the next level and really being able to work off of an advanced platform.
One thing that I mentioned to people on the show, and of course, even as a guest on other shows as well, is that typically you need to present value to other people, other partners. Maybe you want a GP on a deal or something like that. You have to be able to present value. They're not just going to let you GP on their deal because they're being nice. And in your case, though, I imagine you must have presented a whole lot of value if they even asked you to come on board and join their company, right? I mean, that's what it sounds like to me anyway.
Yeah. I hope to. I like to think that, right? I like to think I'm creating value for folks. I think that, I think my skill set from just being a management consultant, knowing how to critically think and solve problems, being an entrepreneur and really a startup owner and growing that business to about 95 employees and right around 30 million in annual revenue. Going through that process of scaling that up, I think has given me a lot of good experiences, a lot of good lessons learned that translate really nicely into real estate. And I think have, made me very well equipped to do the type of projects that we're doing now, which a lot of it's large scale, apartment acquisitions where we're doing, a lot of renovations, and a lot of it is project management, people management, and, being able to kind of think outside the box, being able to, leverage background in technology to implement a lot of new technology on these properties and use that to build efficiencies. So yeah, I think there's a lot of value that we bring on both sides. I think that's why we felt like, a partnership was the right way to go to really grow. I view coming onto their platform as being able to grow 10x to what I would have on my own. And
Yeah.
that's what we're hoping to achieve. And I think that's what we've started the ball rolling on over the past year. And now it's really just about scaling up and continuing to realize the strategy.
Yeah, that's right. Excellent. Well, now, so let's talk a little bit about raising that capital, because I'm sure that's a topic on many people's minds. That's one of the top questions I always get whenever I'm at a conference or something like that. It's like, how do you raise money? How do you raise money? So it's interesting to maybe to get your take on what you guys do. If you guys have a process internal to your company, or maybe you have a process to share even prior to that when you were on your own.
Yeah. Yeah. I mean, I think there's a lot to unpack there. If you think about it so just starting at the beginning, right? If you're just starting out and you want to go raise money, I can tell you that my first deal that I went and wanted to raise money for, I had a goal and I raised about half what that goal was. And that was kind of a kick in the pants of like, wow, this is not that it's hard, but if you're not prepared and you're not preparing your network way ahead of time before you need the money, then you're not going to be in a position to be able to raise the amount of money that you need. And what I mean by that is, like, when you're starting out, you're likely raising money from friends and family, right? Because you really don't have a track record. People are going to do it because they know you, they like you, they trust you because you've had a relationship with them, right? But in many ways, you have to change their long-term perspective of you, right? Because a lot of people see you as, oh, college buddy, or, oh, the guy I played basketball with, or my nephew or whoever, right? They don't see you as the competent professional real estate investor, right? So you have to start changing perception. And I think that's kind of where that's like the kicking off point for a thought leadership platform, right? Is to be able to just start to have things to be able to educate people, to show that you know what you're talking about and you're taking this seriously, right? And being able to put that together, whether it's, kind of a pitch book or a presentation that you can take out and do that. So it kind of starts there with friends and family. The advice is start these conversations way before you actually need the money, because you want them curious to say, man, Kent is talking about real estate all the time. He's talking about, what he's doing and everything that, all the opportunities out there. Like, that's interesting. I want to hear more about that. Not, Kent is just coming, he's got some new idea and he's coming to pitch me on it. And, I don't know, it sounds like it's kind of sketchy or something, right? Right. So I think you just have to build that level of kind of influence and confidence, and you have to build up, I think that persona of yourself, right? That didn't exist for those long-term relationships, and those can be some of the hardest ones, really. Then as you continue to go out and scale up, right, you're going to get to a point where your friends and family money runs out. Your friends and family are tapped out. You still want to do deals. You want to raise more money. I mean, that's where, just at the highest level, like, the thought leadership platform comes into place, like a true platform. What I mean by thought leadership platform is that you're doing something where you're engaging people in like a one-to-many relationship, right? Such as a podcast. Whereas we are talking right now, but this podcast is going to go out to thousands of people right? And whether I'm sleeping or I'm working out or whatever I'm doing, people can listen to it on their own time, and they can get to know you, and they can get to know me, and they can start to build that rapport. And, it really does go back to people invest, whether it's sales or whether it's investing. People want to work with people that they know, like, and trust. And so you have to start to build a rapport with people. You can only have so many one-on-one conversations. You can only sit down for so many coffees before it's not scalable. Right. So that's what the thought leadership platform really allows you to do. It allows you to scale. It allows you, and you pick your poison, whether it's YouTube, whether it's podcasts, whether it's blogging, whatever you like. It can be any of those things, but it's about creating relationships at scale, really, at the end of the day. So, you get to the point when the way it's working, the way I knew it was working was when I started having conversations like this, where, someone would reach out to me and say, "Hey, I heard you on X. I'd like to understand more about, investing with you." And then we get on the phone, and at the beginning I would start with like my pitch, like, "Oh, I'm ready to go." And they'd be like, "Well," I had a couple conversations went like this, where they're like, "Well, no, actually, like, I already feel like I kind of know you because I've listened to like 20 of your podcasts, and, I feel like we have a good rapport." And that sounds like, at first I was like, "Oh, that's kind of, that almost seems a little strange," right? Like, 'cause like, this is the first time really talking with them, but I've experienced the own thing on the other side with other people's podcasts I've listened to, where you feel like you really start to understand the person, what they stand for, and their attitude and things like that. And that's how, so I had a few conversations like that. And I said, "Wow, okay, this is really like proof point that this is working." And you just need to keep doing it. So, that's what I would say. The biggest thing about raising money is about, you got to be consistent. You got to be in front of people. You got to be doing it all the time, whether you have a deal or not. And it's not in a sales or like a cheesy way, right? You're not pitching them some snake oil. It's that you're offering them an opportunity, right? That they wouldn't have otherwise. Most people, with the type of investments we do, because they're private placements, they wouldn't do it unless, unless they've sought it out, or unless they know me or know somebody else that does this, right? It's not like you can just go online. Sometimes you can with crowdfunding, but you can't largely go on like you can with, like, go on Schwab and invest in a stock, right? You kind of have to know somebody that's doing it. And because of that, you're really offering an opportunity. And I think that perspective is really important. And that's something that I think at the beginning I struggled with. Like, "Oh, I don't want to bother him and, pitch him this." And it's like, it's not really true. You're giving people a great opportunity to get returns that they cannot get in almost any other investment, especially no investments that are readily available in your 401k or anywhere else. You're offering them tax advantages and all these things that can really change people's lives. And once I was able to think about it that way, that's what really, really pushed it forward for me, of being able to feel like I'm really adding value to folks, by offering them our investment opportunities.
Yeah. And then, to even expand on that, and that really, that beginning part there, which I think you touched on this, but I really want to emphasize, is that if you are going to be in this game as a real estate entrepreneur, people cannot view you as your next lame brain scheme or whatever it is. Oh, it's something else. Joe's pitching me some new thing. Oh boy, here we go again. What's it going to be this week? Last week it was Bitcoin. This week it's real estate. Next week it'll be a new app. It's kind of like, you really need to stay focused on whatever it is you want to do, i.e. real estate. And then when your friends and family get to know you as that person, then, and you're able to nail that down, then you can maybe start getting what's called a soft commitment, right? That part is huge too, because that way you're getting an idea. And to your point, it said earlier, it's like you're able to raise half of what you were looking for. But I'm guessing that you actually had some soft commitments, and some of those are going to fall out, and that's okay. That's why you get the soft commits, right? That part is absolutely huge.
Yeah. Rule of thumb would be, get soft commitments like 2x of what you actually need, because especially at the beginning, I think, people are going to fall out. And you don't want to be left in a position where, somebody backs out and then you don't have the money to fund the deal. Right. So inevitably things happen. Inevitably people will back out. And that's why it's just something that you kind of like you said, I view it as something that has become kind of part of my persona, right? It is, and it's not hard because I'm really passionate about real estate. I love real estate. I think real estate has changed my life. It's let me leave my, leave my old career behind, start a new career where I have just ultimate flexibility in everything I want to do. And it's opened up a ton of doors for me, created new relationships and new opportunities. So, I think that it's easy for me to be passionate about it. I think you have to be passionate about it. It has to be something, like you said, consistency. You got to, if it's your thing, like just always be talking about real estate. And then, your friends and family starts to come around and say, man, Ken, you've been talking about this for a long time. Like, tell me more about this. How do we do this? Right. And that's how you want it to develop when you're first starting out.
Yeah. Now, what sort of tools did you manage those contacts with? So I'm guessing that when you're early on anyway, you're reaching out to a lot of people. You've maybe had a few conversations. Are you using any specific tools or online tools or whatever? Or are you just using Excel and collecting emails, or like what sort of things were you using?
I mean, when you're first starting, like I did, I would recommend just start in Excel. I mean, your list isn't going to be that big, and it's like you can definitely spend a lot of time getting bogged down trying to set up, because I did this. I try, set up a CRM and get all that going. And while you're doing all that, what aren't you doing? You're not reaching out to talk to people. Right. And that's what really matters. Right. So like start with Excel, keep it simple, just start talking with people. And then as your list grows, hopefully if you're successful, you get to a point where it becomes unmanageable in Excel, and you move on to another platform, and you can move on to a CRM, and you can start to streamline things. Like I've got things pretty streamlined at this point, but I didn't start that way.
Yeah. Well, and it's important to note though, guys, whenever you start messing around with some CRM or some other barrier, I'm going to call it in air quotes, a barrier, it's kind of like it's your brain tricking you into thinking that you're doing something constructive to meet the goal. And the goal is to talk to as many people as you possibly can, not to set up a CRM. The CRM is secondary, but it's like an Excel spreadsheet, or if you don't have Excel, Google Sheets, it's free. If you have a Gmail account, you could use that.
Google Sheets is a great product, and honestly, Google Forms are a great product. For collecting soft commitments. That's how I started, was just a Google form. I created my own form to collect folks' information, and that was how I would send an email out. It would have a link to the form. They go in, they fill it out, it files into a Google Sheet, and it's a really easy way to collect commitments. And again, it's not complicated, right? Like, yeah, I liked your point about your brain's tricking you. Like you feel like you're really productive, but you really haven't done anything moving you closer to your goal. Right.
Yeah.
So just keep it simple, and make sure that you're spending your time talking with folks, and creating content.
Yeah. And then something else to note too, that Google form thing is a great idea, because one thing that you're doing as you're reaching out to those folks on maybe it's every other week, you're saying, hey, I've looked at these 4 deals, and these are the deals I looked at. We passed on all 4 of them, and here's why. They're getting to know who you are, what you're about, whether it's your friends and family, it doesn't matter. But then when you're getting close to a deal that you like, you send out that form. You say, hey, Bob, hey, I'm working on this deal. Would you mind filling out this form? And then that's when you realize if they're for real or not. That's a great way to tell, because now that they're memorializing it, so to speak, and acknowledging it in an actual document, and meaning, and it's online, but it's like by them saying yes or no and how much, they're being for real. Like now they can't just blow you off and say, oh yeah, sure, I'll throw some money at it. Okay, great. We may have a deal coming up here in the next 30 days. How much can I put you down for? And if they put down 0, then for sure they're not going to do the deal. Right? That's. Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.
Absolutely. And just because somebody says no, don't write them off completely. That's just no to that one deal. It doesn't mean it's no to the next deal. Right? Like I think that probably my maybe my third deal I did was when I had a lot of people that said no the first time come around and invest, where it was like, some people needed a couple proof points, right? And so, just because they say no on the first one they're not saying no to you. They're not saying no to what you're doing. They're not saying no for the rest of your life. They're saying no to that deal, right? Because they're saying no because they don't know they don't know you well enough. They don't like you well enough. They don't trust you enough, right? So you got to solve for those things and figure that out. And it's not always just those three. Some people's risk profile, like some of it has to do with the deal profile, right? So I think this is important to touch on. Like, you need to start the conversation with people by understanding what their goals are, because you need to align the right investors with the right deals, right? So some people are going to want cash flow. Some people don't care about cash flow. Some people want asset appreciation, right? They want to build wealth. Some people, especially your higher net worth folks that have other streams of income, are going to want tax savings and tax sheltering. So you need to understand what their goals are. Start with their goals. Just in all conversations, it's always about them, right? It's always about your customer, your client, the person you're talking to. So don't start with your pitch. Start by understanding what their goals are, and make sure that you're putting them in deals that are a good fit, that align with their goals. Because some people, that's why they won't do that deal, because it doesn't align with what their goals are. And if you identify that ahead of time, you don't have to waste your time pitching to them. You can go to the people that do align. So I think it's important to start with what their goals are, and making sure you're thinking about that in the deals that you do, right? Like, what type of deal is this? Is this a cash flow deal? Is it an asset appreciation deal? And then identifying your investors are going to fit there, and just making sure that when you're talking with folks, you're always like, your self orientation should be very low, right? You should be orienting to them, and it should be about them. When you get, like, I think a lot of people make this mistake early on, especially when they're trying to build credibility. You want to just do your pitch because you want to show them how much you know, right? And that's not the right way to go about it. The right way to go about it is let them talk, understand what their goals are, understand what's going on in their life. Why are they interested in real estate, right? There's something probably driving them that way. And in doing that, you'll build a rapport, and then the rest will become easy.
Yeah. Well, one thing that I want to emphasize again, which is huge, it's about them. It's not about you. That part is absolutely huge. I mean, because there's so many people that, especially not to start banging on the newbies, but what happens is that just like you said, they tend to make it about them. It's about me. I'm raising the money for this deal. It's about me. It's never about you, right? Just as you pointed out, Kent, it's like, it's phenomenal. It's always about them. What do they want? What do they need? What do they need to see? And then from there, you can then tailor your response depending on what they want, right? And better yet, and maybe you don't match up. Maybe they're looking for appreciation, like crazy appreciation. Maybe they love investing in Florida. Well, you're not investing in Florida. Maybe you're investing in Wyoming. That's just a cash flow market. People live there. They just get strong cash flow, and there's no appreciation. That's okay. It's not the right fit, but it's fine. Doesn't mean no. Maybe it's just not right now. Maybe in the future they might change their mind. People change their minds all the time, but I love that. It's always about them. It's not about you. That part is absolutely huge. Absolutely huge. Yeah.
You've got to understand where the customer, or whatever, whoever you want to call them, investor is in their journey, right? Because I think that's another important point, is like, what I mean by that is like, how sophisticated are they? Like, have they invested in real estate before? Have they not? Like, do you need to sell them on why they should invest in real estate first before you start talking about your individual deal? Because if they think real estate is extremely risky, then it doesn't matter what deal you have, because they're not investing in real estate. So, maybe it's real estate. Maybe they've invested in real estate because they bought a single family home, but why should they invest in multifamily? Right. And if they've invested in multifamily, well, then why should they invest with you? Why should they invest with you and your company? And and if they've invested with you in your company, then, well, why should they invest in that particular deal? So you got to understand kind of where they're at. You got to meet them where they're at. Understanding their goals helps you understand where they're at, right? And their experience, and having that conversation up front. I mean, when I have new investor conversations, I try to talk as little as possible. I just ask them, so like, what can I tell you? What do you want to know? And start the conversation just very simply. And then I start to ask them, okay, well, because maybe they have specific questions. If they don't, I say, well, have you invested in real estate before? And what are your goals? What are you trying to achieve? Why are you looking for an investment? And just have those conversations, ask those questions, and use your questions to try to, like, if somebody says to me, oh, I think real estate is the the riskiest thing in the world, I would never do that. Well, the right approach is not saying, well, no, it's not risky, and let me tell you the 6 reasons why. Right? That's not the right approach. You're not going to change their mind. The right approach is you need to ask them questions that help them to think differently. Right. So I think questions are extremely powerful. And when you're talking with people, it doesn't matter when you're talking with anyone, questions are a great way to open up a conversation and to help people think differently on their own. Because people, I don't think, really are convinced by like, if you tell me something, and I disagree with you, like, that doesn't convince me. But if you ask me a question that makes me think in a different way, then, it's kind of like Inception, right? You come around to it on your own. And I think that's how you can change people's perspectives.
Yeah. Yeah. It's funny. I love that one, because I actually used that very early on. I remember someone said to me, they said that real estate is very, very risky. And I'm like, huh. And we're actually in an office building at that time. I said, how long has this building been standing here for? And she's like, what? I go, this building that we're in right now, how long has it been up here for? About 100 years, maybe? She goes, well, yeah, I guess. And I go, do you think in those 100 years, this thing has been thrown off cash flow the entire time because someone owned it? She goes, well, that's reasonable. I go, and do you know that people currently rent here right now? And they're paying someone money? I mean, sounds to me like, then I said, do you think this building's going to be here in another 10 years? Is it reasonable to think that? And she goes, oh yeah. I go, I don't know, it seems like a pretty low risk to me.
That's a kind of a good example of like, you get them to think differently, right? Because a lot of, like, what I've found with especially folks that are newer to real estate is there absolutely is a perceived risk that really comes from ignorance.
Yeah.
And ignorance isn't bad, right? Ignorance doesn't mean you're stupid. Like, people get offended by saying you're ignorant. Ignorance just means it's a lack of knowledge. You just don't know, because a lot of people have not been experienced or not been exposed to real estate. And if they have, it's probably buying a single family, right? And being a landlord, right. Or a lot of people know somebody that did, and it didn't go well. Right. And so you've got to overcome those barriers, to kind of get to where they're willing to open up that conversation.
That's right. And you know what though? And then there's some folks that just don't want to do the deal no matter what. And that's okay. You know what? If they still want to be part of the list, add them to the list. It's okay. Maybe they want to invest with you today, but maybe they'll invest with you at some point in the future. Maybe they won't invest with you at all. It's all right.
Yeah, I can tell you that like early on, I had a few people circled that I was like, oh, these people are definitely going to invest. Like, I know they have money, these are like my prime targets. And yeah, there's a couple of them that, I've had the same conversation with them four or five times. Every time they're interested, every time we get into it, they have the same questions. I have the same answers, and they never end up investing. And that's okay. I don't waste time on it anymore, because, I've learned, like you said, some people are just never going to do it. Yeah. And that's okay too. You just got to kind of vet that out, and you'll get a feel for that over time, and just don't waste your time on those, because there's plenty of people that do want to invest in real estate, and you just have to find them. And you do that by networking. You do that by building thought leadership. You do that by going to conferences. You do that by showing up for meetups and things. And that's the hard work when you're first starting out. Like nobody, I'll have people. So I run a meetup. I run a monthly meetup, and it's at 6:00 at night. It's second Wednesday of every month, and it's not the most convenient, especially if you have kids and things, right? And I have people say all the time, "Oh, no, I can't make that. I've got kids, blah blah blah." It's like, well, I've got 3 kids. I got a 5-year-old, a 3-year-old, and a 1-year-old, and I got a new puppy right now, and all this, but I make the time to go because I'm committed to it. So like if people tell me that they're, oh, I can't make it for this or that, whatever, I say, that's fine, but like you're not really serious about it. So it's, again, it's like, I don't know. I guess it's like a way to kind of weed folks out, especially like if it's something that they, if you really want to be an active investor, you really have to spend the time building that network. And it's not always going to be at the most convenient times for you. Right. Like,
Yeah.
I think it's got to be something, like I said, it's become part of your persona and part of your passion. And if it's not there, as soon as it's inconvenient, it's going to fall off.
Yeah, that's right. The network building component is absolutely critical to this business. And to your point, like you committed to showing up, doing the meetups and things like that. And of course, doing the podcast. That's one great way to do it. But I mean, there's many other ways as well. And I think people need to see that commitment out of you, because that's one thing that many people just totally underestimate. Yeah, there's money out there. Investors they want to put their money to work. But at the same time, if you don't look like you're committed, if you don't look like you're educated in how to do this business, they won't hand over their nest egg to you. They just won't do it. I mean, because keep in mind, you have a fiduciary responsibility to these folks, right? And if they don't believe that you will give them their money back, at least anyway, they're not going to want to invest with you. That's the long and short.
Like, some gurus or whatever you want to call them say things like, well, if you have a good deal, the money will come, or vice versa. If you have the money, the deal will come, whatever. Like, neither of those are true. Neither of those are true, because if you could have the best deal in the world, but if you don't know anybody that wants to invest in real estate or has the money to invest in real estate, and not only if you don't know them, but you haven't primed them, right? You haven't warmed them up and built trust and rapport with them. Like you said, they're never going to hand over their nest egg to you. I mean, because they're not going to trust that great deal you have is really a great deal. And same thing the other way around. Like you could have all the money in the world, but you're never going to find a good deal unless on the other side, you're networking with the brokers, right? And the people out there that control the deal flow. So networking is just a huge part of this job. And you're not going to be successful unless you're constantly out there and you're constantly building relationships.
Absolutely. And it doesn't have to be your own. Like, it doesn't have to be your platform. It doesn't have to be. You can certainly just attending other events. That's one good way to do it. Of course, make sure that you have your credibility package created, and by that I mean your website, business card, what you do, what you're about, what you stand for. Well defined. You got to have that. If you don't, you're just another dreamer. And if you really want to make it in this business, you have to look like you're serious. You have to look like you're serious. I know it might sound mean when I say that sometimes, but it's all out of love, guys. It's all out of love.
I mean, I think you're just being honest with folks, right? I mean, because there's just a level of commitment that you have to put into anything, right, to be successful.
Yeah,
I think especially when you're running your own business. I mean, it's just you got to be like, everybody wants the. I had a friend, a coworker that would always say this. He's like, everybody wants the assets, but nobody wants the liability. And right. It's kind of the same thing, right? You want the upside, but it's like, nobody ever sees like what comes behind it, right? The years of work that go into all of a sudden the person that's an overnight success. Yeah, right. There's a lot that goes into it. So
that's right. Now, Kent, for someone listening right now, maybe they're not really sure what to do next. Maybe they're not even sure how to raise capital, and hopefully they got some value out of this. What sort of bulletproof advice would you give that person that's listening?
Yeah. So if you're starting out and you're trying to raise capital for the first time. I mean, some of the things that we talked about earlier, like you have to start thinking about changing the perspective of how your friends and family view you, right? They need to view you as a real estate investor. So you need to start, educating yourself and talking about real estate. I think something that you can do very concretely is put together a credibility book that has, and if you don't have a deal, then that's okay. But the credibility book has, what about you is going to make you a successful real estate investor, right? So relate your past or what you're doing now to how that's going to help you be successful, right? Outline your strategy, right? Like, what are you going to go acquire? Why are you going to acquire that? How are you going to do it? And then have an example deal. It doesn't have to be something you actually own, but I mean, all you have to do to get deals is go to CBRE or Cushman Wakefield or any of the other brokers and get on their deal list, and you'll start getting emailed opportunities, and then take that and underwrite that and turn that into as if you were really going to go and acquire it, and talk about that. And then you can say, here's an example deal. And if I were to bring you something like this in the future, is that something you'd be interested in investing in? Right. And so you can start to have that conversation, very early. And I think set up like a real meeting. Like, don't just, go out with five. I mean, maybe you can with some of your buddies, but, I'd say like, don't make it casual. Like, as I say, don't go out and just have like five, beers with like five of your buddies and start saying, hey, we should invest in real estate. Like, make it a one-on-one thing at the beginning, sit down, like have a real meeting, right? Bring a presentation, talk about it like they really are an investor that you don't know. And I think if you do that, you got to start changing people's perspective. And if you do that, you'll be successful. Get them primed up so that when that deal comes, they're ready to go. Nice. They expect that it's coming. And I think that's the biggest thing for people at the beginning, and don't get caught up in all the software and platforms and things. Like, use Excel and just start talking to people. And
that's right.
That's for the first deal. And from there you can take off.
Yeah. But this is a people business. That's what this is. It's not, you will not find your first deal digging on LoopNet, putting up a CRM or anything else like that. This is all based on people, brokers, investors. You're connecting everything. You're connecting the dots. That's it.
And that's a really good point, because we talked about the capital raising side, but like at the same time you're doing that, you should be doing the same thing with all the brokers in your market. Yeah. You need to be getting in front of the brokers. You need to be talking with them. You need to be calling them every couple of weeks. You got to stay top of mind, especially when you're new. Because that's how you get deals. That's the only way to get deals in as competitive as the market really nationwide is right now, is to stay top of mind. So you got to be doing it on both sides.
That's right. All right, guys. Well, if you want to reach out to Kent, you can reach him via his website at kentritter.com. Hope you got some info and learn a little more about raising capital for your real estate projects. Thanks for tuning in, and I'll see you next episode. Take care. Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.